Imagine a world where every app you use on your smartphone isn't controlled by a single company, but instead runs on a network where you own your data completely. Picture a social media platform where your posts, likes, and shares are secured by technology that no single entity can manipulate. Or a gaming app where your in-game assets are truly yours because they're verified on a decentralized network. This is the promise of Decentralized Applications, or DApps. In our previous sessions, we explored the mechanics of smart contracts and how they autonomously execute agreements. Today, we step further into the world of blockchain to discover how these smart contracts power DApps, applications that offer transparency, security, and control to their users, completely transforming our digital lives. Welcome to EduTube, your trusted source for clear and engaging blockchain education. In this video, Lecture 20 of Module 4, Smart Contracts and Decentralized Applications, DApps, we're providing an in-depth overview of DApps. At EduTube, our mission is to simplify complex blockchain concepts so that even those with no prior knowledge can understand and appreciate how this technology works. While traditional apps depend on centralized servers and intermediaries, DApps operate on decentralized networks like blockchain, meaning no single party has control. This decentralization not only boosts security and transparency, but also empowers users by giving them true ownership over their digital interactions. Today, we'll explain what DApps are, how they work step by step, the benefits they bring, and the limitations they face, all illustrated with everyday examples that relate directly to your life. Let's begin with the basics. A decentralized application, or DApp, is a software application that runs on a decentralized network, such as a blockchain. Unlike traditional applications that rely on a central server, DApps distribute data across multiple nodes in the network. This means that the app does not have a single point of control or failure, making it inherently more secure and resistant to censorship. The foundation blockchain and smart contracts DApps are built on blockchain technology and are powered by smart contracts. Recall from our earlier lectures how smart contracts are self-executing programs that automatically enforce agreements when certain conditions are met. In the context of DApps, these contracts form the core logic of the application. For instance, in a decentralized marketplace, a smart contract can automatically hold funds in escrow and release them only when both the buyer and seller fulfill their obligations. This eliminates the need for a central authority, reduces costs, and increases trust among participants. How DApps work in practice. To better understand DApps, consider a real-life example, a ride-sharing service. In a traditional ride-sharing app, a central company manages driver assignments, fare calculations, and payments. In contrast, a decentralized ride-sharing DApp would allow drivers and riders to connect directly. When you request a ride, a smart contract automatically matches you with the nearest driver, verifies the fare, and securely processes the payment without any intermediary. This not only speeds up the service, but also cuts down on fees and potential data misuse. Another everyday example is a decentralized social media platform. Instead of your data being stored on a single server controlled by a corporation, your posts, interactions, and even your personal profile are recorded on the blockchain. This ensures that you maintain control over your content. If you decide to leave the platform, you take your data with you, something that isn't possible on traditional centralized social media sites. Benefits of DApps offer numerous benefits that can revolutionize how we interact with digital services. Enhanced security. Because DApps operate on decentralized networks, they are much less vulnerable to hacking. With no central server to target, attackers face a far more complex challenge. Transparency. Every transaction and piece of data on a DApp is recorded on an immutable blockchain, allowing for complete transparency. For example, in a decentralized finance (DeFi) application, you can verify all transactions on the public ledger, ensuring fair play. User empowerment. With DApps, you own your data. Unlike traditional apps where companies monetize your personal information, DApps give you control over what you share and how it is used. Lower costs. By cutting out intermediaries, DApps reduce transaction fees and operational costs. Imagine making a cross-border payment with minimal fees because there is no central bank or intermediary involved. Resilience and reliability. The decentralized nature of DApps means that even if part of the network fails, the application continues to operate smoothly, much like a peer-to-peer network that remains functional despite individual node failures. Limitations and challenges of dApps. Despite their promising benefits, dApps face several challenges. Scalability. As more users join a blockchain network, transaction times can slow down and fees may increase. It's similar to a crowded highway during rush hour. More users can lead to congestion. User experience. Many dApps currently have interfaces that are less user-friendly compared to their centralized counterparts. The complexity of blockchain can make these apps seem intimidating for non-technical users. Regulatory uncertainty. The legal framework surrounding dApps is still evolving. The decentralized nature of these applications can create challenges when it comes to regulation and dispute resolution. Data privacy concerns. While dApps are built on transparent blockchains, this transparency can sometimes conflict with the need for privacy. Balancing openness with the protection of personal information is a significant challenge. Dependence on external data. dApps often rely on external data sources known as oracles to function properly. If these data sources provide inaccurate information, it can lead to errors or unintended outcomes within the application. Real-world applications and daily life impact. Consider a decentralized finance (DeFi) app where you can lend or borrow money without the need for banks. With dApps, interest rates are determined by market dynamics and all transactions are recorded on the blockchain, providing transparency and fairness. Another example is in digital identity management, where a dApp allows you to control and verify your credentials without relying on a centralized authority. Even in gaming, dApps enable true ownership of in-game assets, which you can trade or sell outside the confines of the game's ecosystem. Daily life is increasingly intertwined with digital services, and dApps have the potential to redefine how we interact with these services. Whether it's through secure payments, transparent social media, or decentralized marketplaces, dApps can empower individuals by putting control back in their hands. In summary, decentralized applications, dApps, represent a paradigm shift in how we use digital services by leveraging blockchain technology and smart contracts. They offer enhanced security, transparency, lower costs, and true user empowerment while also presenting challenges such as scalability issues, less refined user experiences, regulatory hurdles, and data privacy concerns. At EduTube, we are dedicated to breaking down these complex topics into easy-to-understand lessons that empower you to embrace the future of technology. Thank you for watching Lecture 20 on Decentralized Applications, dApps, an overview. If you found this video insightful, please like, subscribe, and share your thoughts in the comments below. Stay tuned for our next lecture as we continue to explore the innovative world of blockchain and decentralized applications.